Hey, welcome back. On this episode of the Mindful Money Podcast, I'm chatting with Julie Kane. Julie's the CEO and co-founder of Democracy Investments. It's a registered investment advisory firm focused on promoting democracy and influencing capital flows in financial markets. The firm's Democracy Investments International Index reweights the traditional international equity index towards democracies and away from authoritarian regimes, using the Economist's Democracy Index. Now, Julie began her career as a U.S. naval aviator, recently served as the captain of the California State Guard. Thank you. She has a 20 plus year background in the financial services that includes product innovations at Wells Fargo, Charles Schwab, Advisor Services, SCI Investments, and Autodesk Ventures. I'm actually really excited to have her on today. It's going to be a little different from our normal conversation because I have someone here who is actively manufacturing financial products for popular consumption. Now, I have to say this right up front. I don't know all of our listeners. I don't know your financial situation. So this isn't a recommendation for anyone to go out and buy this. This is another step in the educational process. And I hope you get a ton out of it. I know I'm going to learn something today as well. Julie, thanks for coming on the Mindful Money Podcast.
Thanks for having me, Jonathan.
First off, where do you call home and where are you calling in from?
I'm calling in from Orinda, California, just over the hill from you.
All right. And did you grow up here in the Bay Area?
No, I actually grew up outside of DC in Alexandria, Virginia. My dad retired from the Navy and consulted to the Pentagon. So I was lucky that I didn't have to move around after he retired, and went to UVA, did ROTC there. And then I was actually recruited out of the Navy by SCI. And that brought me to the Bay Area, and I've been in the Bay Area ever since. And my fund sits on SEI's platform, so I've sort of gone full circle.
Oh, cool. So I want to go back to the beginning a little bit. What did you learn about money and entrepreneurship growing up?
So my dad grew up during the Great Depression, and I could not leave the table if there was a little morsel left on my plate. And that pretty much trickled through, like being savvy, not being wasteful, being careful. And then I had the good fortune to have Navy Federal Credit Union as my first bank, which is an outstanding credit union. And I learned the importance of, I saved pretty much everything I earned in my early jobs. And I think I was fortunate to be brought up in a time where you had to work hard, and therefore you're careful with your strategies, not taking money for granted. And I'm doing the best to pass that on to my own children.
Do you have any secrets in that regard? Do you know how to? I have children I'm trying to pass it on to too.
Well, I think working and having them, as early as possible, pay for their own pleasures, pay for their own phone, pay for their own entertainment is good. Because then they really feel the value. If it's like, well, I earned that. Oops, I just lost all that. Maybe I shouldn't have gotten DoorDash 3 days in a row.
Daughter had a phone and it was in a pocket of her pants, and she took it to Six Flags and it flew out of her pocket while on a roller coaster at Six Flags. And we had to regret to inform her that was on her to replace. She actually called Six Flags and they found it. So after 3 days later, it survived. It was totally incredible. Lucky her, right? Anyway. So
she's so fortunate.
Totally. Can you name an experience growing up? When were you first aware that money was something you had to think about? Was it a purchase when you were, younger than 10? Was it a job when you were 13? What was that first time when you started thinking about money?
Well, my dad offered to pay for college so I wouldn't join the Navy. So that was probably the first time I had to really think about it. It was my way of rebelling, was to join the military so I could be independent and not expect anything from my parents. So that was the first time I sat down and said, okay, what do I need to live outside of my scholarship? And where will it come from? And how will I make this work? And then, that was pretty straightforward. I'm trying to think if there was I guess making the decision to have kids, what that does to your financial planning was probably the next big accounting exercise that I did. And then more recently, starting my own business. That's probably been the most challenging. And being an entrepreneur has really taught me a lot about savvy financial planning.
Yeah, we'll get into that a little bit. Before we get into that, though, can you just give us a little bit? I did a rough thumbnail sketch. Could you give us a little bit of history of your time in financial services specifically?
Sure. Yeah. And thank you for that great introduction, by the way. As I said, after serving in the Navy, I was recruited out by SEI, and there I worked directly for the CEO. I was in the first class of junior military officers, and that's still a program they have today. And actually, my two of my relationship managers are former Navy, so I like to tell them they have their job because I didn't screw it up way back when. So SEI was a great for, I mean, it's always hard transitioning out, but I was so fortunate. I worked for some amazing leaders there. And at the end of one of the projects, they said, okay, everybody on this team gets to pick any office and any job. I picked San Francisco mutual fund sales and marketing. And as I said, I've been in the Bay Area ever since. Then I went back to business school, UCLA, did management consulting for a bit, then corporate venture capital at Autodesk, which is where I met our chief investment officer, actually. And then I was recruited back into financial services from there, and I've been in it ever since. So I started at Wells Fargo's private bank, helping them build out product and client segmentation strategies. And then I worked at Charles Schwab, helping the RIAs who custody at Schwab with their transition planning and human capital
Mm.
strategies. And then I got recruited back to Wells Fargo, built out their first competitive intelligence platform, which was super fun for their whole wealth brokerage and retirement line of business. And I ended up, I like to say I'm the Forrest Gump of Wells Fargo. I worked in every line of business at Wells Fargo except for wholesale. I was there when they were the darling, and I was there as they were cleaning up the mess. So I've seen every side of financial services. And, I was drawn to it. So way back when I was deciding to get out of the Navy, I went to it was like a speed dating for junior military officers, and I met with multiple industries, but I was drawn to financial services because I felt like money, the economy, that's where you have impact. And I've always been mission driven, and I wanted to choose a path where I felt motivated in the same way. How can I contribute to the world, making the world a better place? And I thought financial services. Most people tell us, they're like, really? Why wouldn't have picked that in our industry for that? But, coming from the outside in, it really does. To me, it feels like one of the most noble fields you could be in because of the huge impact money has on everybody's lives. So hats off to you and what you do for your clients every day and making all those important life choices
Well, thank you.
easier.
Yeah, I get the same sort of a weird, people go, you went from studying comparative religion and Buddhism to finance, please explain, right? And I have the same sense. Like people have so little knowledge and so little understanding about how this system works. And you just open up any paper today, and there's so much misunderstanding and so much angst and so much pain around finance that you can have a huge impact. The problem is it also attracts people that are purely profit motivated. And I think that combo it's tough for the universe to swallow financial services. So I actually want today to be a little bit more about education. And I'm excited to have these conversations because I don't think most people understand some of the basics. What's an index and why is an index not an indexed product? What's the difference? So can you just take a very basic like S&P 500 in broad
Mhm.
brushstrokes? How does a
Sure.
company, Vanguard, iShares, somebody take an index and turn it into an investable product?
Sure. So your traditional index strategy is market capitalization weighted. And market cap is the number of shares outstanding times the price of the share. So what people are willing to pay for one share. So the product of that is market cap. So it basically computes to company size. And it's one of the most cheap and efficient, easy ways to create an index. So market cap indices have been the traditional way to put together very large diversification at a low cost for a particular strategy.
Can you just touch on the idea? What do you mean by weighting? What is this idea of weighting?
Well, to decide how much to allocate to each company to do it in a neutral, systematic way, the traditional way is to just use this very simple formula. So the market has defined what the share price is and the shares outstanding. That product is the total market cap. And it's a very neutral way to rank companies. Another way you could do it is by their dividends or their revenue. Or you could do equal weighting to every company, and then you'd have as much Apple as you do, a smaller tech company.
So
But
so weighting is, you just said it, like Apple versus a small company. It's the amount when you buy a portfolio of a certain index, it's the amount of that portfolio that is dedicated to Apple or Exxon or another company or whatever it might be. So that weighting
Absolutely.
is the size
Yeah.
in the, okay.
It's basically the company size, and when you boil it all down at a very simple level. The market
And
cap just looks at company size. It doesn't take any other factor into account.
and you listed a couple, and I think most indices are built that way. And like you said, you can do equal weighted. And there's other ways that people have, you mentioned like dividend weighting, and there's like price to book, and there's all kinds of other ways to do it. Have people been looking at other ways to do it? I mean, there's a ton of research on this, right? Is there some that work and some that don't work? Is that something that you have any sense of given what you're doing?
Well, the more actively you manage a strategy, the more you're going to have higher fees and higher transaction costs. So that has to be weighed with any, deviating from the traditional market cap approach. Interestingly, I've been watching all the ESG discussions and the ratings around ESG and how different strategies are being scored. And there are, I think, some more creative ways to bring in ways to look at the new world we're entering, and that's part of the motivation behind our strategy. Our strategy is very much, we are proponents of passive investing, so we tried to create a strategy that is as passive as possible while incorporating a new lens to account for, in our case, changing geopolitics and concern for democracy.
So where did that idea come from? Like, how did you decide, oh, there's all these different ways there people are tilting or factor-based ways, people, weighting something price to book. How did you say, you know what, let's do weightings based on democracy? How did that come up?
Well, my partners and I were very concerned, and this was during COVID. We were watching the all world ex-US indices getting pressure to allocate more and more to authoritarian states, especially China, over the years. And I mean, trillions are following these indices. And I've been in touch with my friends who are still serving, and hearing their perspective of the world, that was, alarming for me, because I was hearing things that weren't in the press. I feel like they're more in the press now than they were 3 years ago. But indices have not been held accountable for, I mean, there are still international securities that are sanctioned in these indices. And for the emerging markets and the all world ex US, two of the top 15 holdings are in securities that contribute to the tech for a surveillance state. It's literally used for surveillance for a community that they're monitoring. So I like to say, how is that ESG?
Right.
Because it's also in the top 15 of the large international ESG funds. I'm not sure most investors are aware, when you have 2,800 securities in your portfolio, do you really are you digging in to see, well, where are you mostly allocated? And I feel like that's our concern, and that's why we wanted to come up with a new passive strategy that would undo that. And so what we do is we hold every country accountable to their democracy score as defined by the Economist magazine. So again, it's simple and transparent and systematic. We're just merging an all world ex US index, the same basket of stocks that are in the market cap, with the Economist Democracy Index. And that results in a very neutral tilt towards democracies such as Norway, Taiwan, the UK, Taiwan. And then we downweight China by 73%. Their score just dropped this year. Saudi Arabia, Egypt, and the UAE, for example. So this way, you can get your international exposure. It's still a passive, systematic index product, so it's cheap for us to manage, and huge diversification. 2,800 stocks, large cap, mid cap, and mostly developed markets. But you're no longer fueling the growth of authoritarian states. So if our fund gets to be as big as a Vanguard fund, ideally, every country will be incented to improve their democracy score to get more capital.
So and this is something I don't think that when we're investing internationally, I don't think we're thinking about how, when we invest internationally, we are funding a specific state. So when I buy my EM portfolio and it just gets dispersed across, how does that get to, China or a state that I may not want to support?
So the indices decide which companies to be included. And again, it's back to that same rule we just talked about: share price times number of shares outstanding. So they're just looking at company market cap. China is classified as an emerging market, and I want to say they're 30 to 40% in most of those emerging market strategies. In the all world ex US, they're at about 10%, and we downweight it to 3%. But again, when you're looking at your giant international fund, is anyone going in and seeing the country allocations and then diving in further? Well, which securities am I allocated to? We're trying to raise awareness for that, and again, provide just a simple, easy strategy to replace the current all world ex US strategies out there.
So I think most Americans, like I haven't spoken to most Americans, but a lot of the people I've spoken to, they just have like a plug. I have to have a certain percentage international, and I'll buy an active fund or a passive fund. I don't even really think about it. I just have to have something international. They may get more granular with their domestic stuff, but for their
Sure.
international, it's just like I need to put something in there. I'm just going to buy a fund or buy an ETF or something like that.
Yeah.
How do you break in and try to express, hey, there's a way that you can do this that may be better for the world?
Yeah, well, it's conversations like this and getting in front of people who are worried. Most Americans are worried about democracy. Most people are viewing authoritarians as maybe not our friends, and we should be, maybe we should stop sending so much of our investments to support their companies and their economies. And if we can put economic pressure, then they'll be incented to improve. Now, if you just divest, then you're no longer incentivizing. That's why we chose to tilt and not screen out any country. Because if they get better, when do you decide to let them back in? And there's actually a lot of interesting research out there around divesting doesn't really work over the long term because they're no longer incented to improve.
Hmm.
And in the case of an oil and gas company, they could just go private, and then they're even more off the books of being influential. Also, in the case of oil and gas, interestingly, only 27% of oil and gas companies are on listable exchanges. The rest are with private institutions and state owned enterprises. So, in our case, we're shifting our oil and gas allocation out of Saudi Arabia and into Norway and Canada, who are more focused on renewables and environmentalism, et cetera. So, our ESG score is good compared to the other all world ex US indices because democracies tend to be more focused on ESG as well.
I wonder if that's, well, I'm not going to go down that rabbit hole right now.
Yeah.
So can you make the philosophical case? And I can make it, that's why I'm having you here, because I'm excited about this, but make the philosophical case for why a democracy might outperform an authoritarian state in, long term, in terms of their economy and then the companies that are acting inside that economy.
Sure. Well, the war in Ukraine really brought everything to the forefront. And there is hard research out there that authoritarians have higher growth volatility and they have more frequent short term crises. That's documented. And we saw with the education sector, rules can change overnight, and suddenly you have to be a nonprofit. That wouldn't happen in a democracy. And democracies, however, they enforce rule of law and property rights. There's a more efficient and transparent use of capital. They have higher per capita GDP. They have better innovation. So our hypothesis is that democracies will outperform authoritarians over the long run, and the companies will try to do their business in countries that support the transparent use of capital. And if you own it, you own it. You're not going to suddenly have to be a nonprofit tomorrow. Suddenly you have to break up all your entities because there's a common prosperity rule that no one company can be too powerful, for example. So we're seeing it play out more and more. And what's interesting is when we launched this during COVID, we were saying, well, you're not going to give anything up. You can expect the same returns at least and support democracy. Well, since we've launched, we've seen, Jack Ma disappeared and then he reappeared. I like to say, what would happen if Elon Musk just disappeared to ours and then reappeared? What would that do to our stock market? So we've seen, world events, and we've seen relative outperformance as well since launch. So our story is proven out better than expected. But we're worried about the trends in democracy. The Economist does such a great job every year. They have 60 different indicators that go into the democracy score. And so it's quite robust. And they've been doing it since 2006. So we're honored to be partnering with them. And we think bringing their methodology into the world of passive international investing could be a very powerful way to both raise visibility and give investors, the opportunity to fuel the growth of democracies in a very neutral and transparent way.
Can you just point to like one or two of the things that are those 60 items that are within the Economist's democracy score? Like
Sure,
what are they looking
absolutely.
at? What are they looking at?
Yeah. Well, they're all on my website. They roll up into themes such as electoral process, functioning of government, political participation, civil liberties, number of women in government, free media, free internet. Yeah, interestingly, the US, we stayed the same in our score. But our fund is ex US, by the way, for just the reasons you said before. Most people, want to more carefully manage their domestic holdings. So we're your answer for just ex US international. But I always get asked, where's the US? We are a flawed democracy. We stayed the same in our ranking because we went up in political participation because more people voted, but we went down in functioning of government. So functioning of government is what's holding our score back right now.
I was just going to ask, like, how are we doing? Because I can't imagine that we're doing great. But I guess more people participating is a good thing, right?
Yeah. Well, and so my chief economist did some really interesting research. And when you look at population, the US is actually doing pretty well. I mean, we're one of the largest democracies. Look who's ahead of us in population: China, India, Nigeria is coming up, Brazil. So for the size of our population, we're not doing that bad, because the more cultures you have, more languages you have, the harder it is to have. So, Norway, it's easy for Norway and Sweden. They've got, one language, one culture, and it's much easier to have a tight democracy when you have less subcultures to manage.
Yeah. They do speak more languages than we do, though. Like that's
This is true. They do, for sure.
it's interesting that they don't
Maybe
need
that's,
to
maybe
because
that's why they're more democratic. Maybe that's their answer. Everyone should learn two or three languages, and that would solve our
three,
problems.
4,
Yeah,
5. I'm going to see a buddy this summer in Switzerland, and I think he knows 4 or 5 languages, and that not even the same alphabets. Like the languages are completely different. It's a totally different way to look at the world, I think. So you mentioned the white paper, like the Economist Democracy Index white paper. Is that something we can link to in the show notes? I'd like to see if we can't put that in there somewhere.
absolutely.
Is that on your website?
Yeah,
We'll link to that.
it is
That's
on my
great.
website. I can get you that PDF.
That'd be great.
Yeah, it's a good.
So you mentioned ESG a little bit ago, and we've had a ton of criticism about ESG, which I personally think is ridiculous. But rather than go into that argument, do you think democracy investments, are you guys in ESG? Do you fit in ESG? And after that, what are your thoughts about that criticism?
We're technically not ESG. However, some people say, oh, you are. You're kind of the S for social, and you're kind of the G for governance. I like to say we're a whole new category of impact investing. We're the big G for government. And, 2/3 of the world's solar panels are made by forced labor. So you have all these environmental strategies that are not considering human rights violations. So I like to say, if you're really going to be full ESG, you should start with democracy and do your tilt for democracy first, and then do your ESG if you want to be sure you're not, supporting solar panels and wind farms made by forced labor. So people who like ESG like our strategy, and then people who are skeptical of ESG also like our strategy because we're so transparent and easy to measure. We're walking our talk. There's no greenwashing. Sadly, there are a lot of ESG strategies that I think the criticism has come about because they're exploited as a marketing tool,
Right.
and they're not transparent. And then for some people, no more recently, they view ESG means you're sacrificing returns. So I don't think there's one writing. I think ESG is not going anywhere. There's a $30 trillion wealth transfer coming for millennials, and they are definitely going to vote with their wallets.
Yep.
And then I have two Gen Z. I can see they're even more upset than millennials. So I don't think ESG is going away, but as it should, it's under more scrutiny, and it's time for the regulators to get involved, and they are. They have a lot of work to do. I think it's so interesting, the different pension funds that are like New York City is being sued for having ESG strategies. West Virginia, Louisiana, and Texas all are restricting contracts with anyone who supports ESG, who has ESG in their strategy. So they're kicking out BlackRock, and then main forced divestment of fossil fuels. I mean, it's just, we're all over the map as a country right now.
Yeah.
Whereas in Europe, they're much more aligned and there's more regulation. And it'll be very interesting to see how this unfolds.
This just popped into my head given what you said about the big G. I think, if no one's used this already, I'm going to be the first one to say this. We need to have an acronym EGS, EGS. So environmental, government, and social. All right. So you
I
heard
like
it here
it.
first. You heard it here first. It's
Thank
the new
you.
acronym
Thank
is
you.
EGS. Use that.
Or
Use
we could
that.
see, where's the D in ESG? There's my other one.
Oh, right.
Maybe
Use
there should
that
be
as
a
well.
D in ESG.
You mentioned, I mean, I know that much of ESG is worried about the E, right? And you mentioned earlier something that sort of struck me that I don't think anybody pays any attention to, because we divest from fossil fuels so that we sell out, I think you said 27%.
27%.
27%. So we would limit our portfolios by removing oil from the portfolios, but that might affect publicly traded companies, but that doesn't affect state enterprises or nationalized oil enterprises at all, does it?
No, it will encourage those 27% to go private. And then what leverage do we have?
And
Actually,
that goes right back to why you don't screen. It's also why you reduce the
why we
weight.
tilt.
You hold it, but reduce the weight.
We
Huh.
tilt, exactly. That's exactly
Tilt.
why we do that. And on the whole ESG issue, interestingly, in the equity markets, the more impactful way to affect the E is in the debt market and to lobby your bank not to finance coal projects. That will have more impact over the long term than divesting of those 27% of the, or to tilt. So hold more BP and less Exxon. So you're incentivizing Exxon to be more like BP and focus on renewables. That's the other strategy that could have more impact.
Right. So I want to go back to, you said earlier that the big challenge in the personal financial world for you has been the launching of a business. So without talking about the specifics of the business itself, what has been the struggle? What has been hard for you in launching the business?
Well, I think while the timing was good for us in that we have unexpected huge outperformance for an index fund, and I'm really grateful for that. We came in at a time when the market started to go south, and people that would have normally, tried out a new fund maybe were like, no, I'm going to watch it for a while, and maybe I don't want to get international at all for a while. So we've had some headwinds just with our timing in terms of the market cycles. That, and because we are a whole new category, I think it takes a while for people to get their head around us. It's been a great few months, though. I'm hopeful that we're going to see a lot of momentum here coming, before year end. And so the big challenge is just getting the word out, because we've built a scrappy model to compete with the big brands. And so to do that, I don't have a huge marketing budget. So it's meetings with advisors like you. And I've been talking to all the platforms as well. They're all aware of us, and they're just waiting for our AUM to get to a point where we can start the due diligence process. And then I guess my other interest is that as now that I'm in it, I see the monopoly that the big brands have. And so I really like finding the smaller advisors who maybe aren't a fan of some of the big brands, and like, well, yeah, you're walking your talk, and that's something new and creative, and that's a story I can take to my clients where, maybe you've got a husband and wife on each side of the aisle. How do you bring them together? And this is a strategy that most people can get behind no matter what your politics. And it's more of, a case for affirming democracy internationally than it is arguing about what we have going on at home. So that's been the positive part. Other challenges, I guess that's about it. Just getting the word out and having the patience to, grow slower than I would have liked. And waiting for that moment where we can really get on the platforms and then have a bigger marketing, have a marketing budget where we can get the word out in a professional way. And
Every small business starts somewhere. So I've never even remotely considered the concept of creating a product for the market. Like I've always just used products that are already out there. That's not true. I actually thought about doing a slow food product at one point, like building an ETF around the slow food movement. And I had somebody that was going
interesting.
to help me do it, but it's just not my space. So I always love chatting with people that, have put the boots on and tried to do it. And I wish you the best of luck. Is there anything that you're working on now that you can tell us about? Is there any other rollouts that are
Yeah.
coming?
Oh, we have a huge product roadmap that I can't disclose, but it will all be leveraging our license of the Economist Democracy Index. And I'm also hoping to expand in Europe very soon. We have, interestingly, a lot of Nordics. They're very worried about democracy and they'd like to see a strategy launched in Norway and Sweden as well. I have a lot of Swedish American fans here in the Bay Area, actually. And yeah, we're toying with some other. Actually, it's where market demand takes us. If people want us to do an ESG strategy, we can do it, and I think we can do one that would be very high impact.
That would blend the democracy index and ESG.
Yeah, there's a way we could do that in the future if there's client demand for it. So I need people to come tell me they want that product, and I will create it. But yeah, basically, I mean, we have exclusive rights to use the Economist Democracy Index, so there are a lot of very creative ways we can leverage it in more equity strategies, fixed income strategies.
I'm curious because I know that there's the last, I think, couple of years, there's been this push towards, what do you call it? Individual indexing, where
Mhm.
people basically create their own index. Something that's frustrating to me as an advisor is I want to express a certain portfolio. And I have all of these tools that have their own individual unique expressions, but I don't have the ability to build a portfolio with these four different expressions. Like I like value, I like small cap, I love the concept of a democracy index. It'd be, and I don't know how to develop this, but how do I go to a place where I can sort of pick off a menu and that menu creates a portfolio that I can implement for clients that has all of the things that I like, that I think are important. That doesn't, I can take a little bit of this, I could have a little democracy, I could have a little ESG, I could have a little, women on the board, do a lot of little things, but nothing that's sort of overarching across all the different strategies, which is, I think that's coming. And I think that may have started with this idea of individual indexing.
Yeah, I think you're right. I think you're right. And
Yeah.
wow, that would how I mean, you'll have so many flavors to pick from.
I know, but and then like you were talking about the small advisor that can tell the story to their clients, then it becomes, this is my story as an advisor. This is what I do. And you can find people that agree with you and just want you to do it. And I think that's
And
totally,
custom
like,
build for whatever they care about. Yeah.
we have this idea of customized medicine. Why not totally customized portfolios? I think I think it's coming. Like, I think it's probably 5 years away and you'll be
Yeah.
an integral part of that, I think. Couple deeply personal questions. One, what was the last thing you changed your mind about? I love the slight sigh that comes after that question.
I have to think about that. What is the last thing I changed my mind about? Well, I recently broke my foot and I was invited to go on a 24-mile, very steep hike in Jackson Hole, Wyoming in August with a really, I know the organizer, but I'm excited to meet the group. Something I really wanted to do. But I thought, oh, I'd be irresponsible. Can't do it. Can't do it. Well, I just changed my mind. I'm doing it. And I've started physical therapy and I have an interval training plan and I'm going to be there. Maybe the last one in, but that's okay. I'll be in Jackson Hole on August 5th
You're doing the hard one.
doing it.
We talked last week and you were going the short route last time we talked. So you did just change your mind about that one. That's awesome.
I
Can
forgot I
you,
told you.
yeah, you did. You told me you weren't going to do it. You told me you were not going to. So now we have proof of mind change. That's, I think, the first opportunity we've had here.
Yeah, clearly it was bothering me that I told everybody about it.
Yeah, well,
That's
we'll see
funny.
how it goes. I hope you don't injure yourself further.
Thank you.
Can you name a place that you visited that's had, and I'm wondering this because mainly democracy, lots of international locations. Can you name some place you visited that really had an impact on you? And what was that impact?
Well, my first duty station was Subic Bay in the Philippines, and they were worried about a coup. So I was had all kinds of really interesting missions to. We were showing our presence in a very interesting way, and yeah, seeing what it's like to live in a third world country. I've never been more grateful to live in a democracy. I mean, just the smell of the sewage and watching the children barely clothed. And I got to take medical supplies to victims of Mount Pinatubo. Really showing my age. Everyone knows when that was. So that probably had the biggest impact on, you know, just living and breathing in another society like that and being on the front line of, helping the villagers.
Yeah.
Yeah, that definitely had the most impact. And then I've been fortunate to travel through Europe on vacation and see, beautiful democracies, beautiful countries. And so definitely some of the that those experiences are part of the inspiration behind our fund and our strategy.
Great. Tell us or tell our listeners how they can connect with you and find out about Democracy Investments International Index.
Oh, well, you can find me on LinkedIn, Julie Kane, Cane. And there's more information on our website, which is www.democracyinvestments.com. And you can also look us up. Our ticker symbol is DMCY. Just like remember the song YMCA? It's DMCY. And yeah, I'd love to hear from you. I really enjoy feedback, especially from folks that are not in the financial world, because the creativity that comes there has been super helpful. So please reach out. My chief economist is actually in Oakland, and he has a lot of really interesting research, and we are often invited to do webinars. So if there's a investment club or any kind of club that wants to talk about what's going on geopolitically in the world, we're happy to take that on and share fresh research.
Awesome. Julie, thanks very much for coming on. I enjoyed it. I learned something, and I hope everyone else did as well.
Thank you so much, Jonathan. It's a pleasure.